So welcome everyone to this next session and thanks for joining. My name is Simon. I'm Project A's Chief Brand Officer and it's an absolute pleasure for me to host this session. The title of the session is Unpacking Brand Value and Making It Work for Startups. Brand valuation is definitely not the most straightforward brand topic, but probably the most important of all. And when it comes to brand valuation, there is basically just one firm, one name that comes to one's mind, Interbrand. I'm Project A's Chief Brand Officer, and it's an absolute pleasure for me. Sorry, I had to turn out, there was the echo. So, Interbrand, they are famous for their annual ranking of the most valuable brands. Last year, for instance, Apple came in first with a brand value of $323 US. So 323 unicorns to stay in the venture capital terminology. And therefore, I'm more than happy to welcome today here on the PAKCon stage, Irina Ermak from Interbrand. Irina spent her entire career in branding and consulting. She was a brand manager at Danone, senior associate at Profit, consultant at the Boston Consulting Group, and over 3 years now with Interbrand as business director. And in addition, she's a startup mentor at the well-known Founder Institute. And I'm really looking forward to her session and the answer to how brand valuation can be of use, not only for the big companies, but also for startups. Irina's presentation will last about 30 minutes, so there will be enough time at the end of the session for a Q&A. If you have questions you'd like to ask Irina, please write them in the chat, and then I will ask them on your behalf at the end of the session. So that's all from my side. Irina, the virtual floor is yours.
Thank you so much, Simon, and hi, everyone. I'm really happy to be here. Thanks for inviting me to speak at this amazing Project A event. I have already listened to a few talks and find all of them absolutely insightful and useful. So as you mentioned, Simon, yes, at Interbrand and in my career, we were looking and are looking in growing brands from big brands to small brands, B2C brands, B2B brands, really looking into topics of brand strategy, naming, visual identity, and whatnot. So a lot of a big range of topics. But today, actually, I would like to talk with you about something else, which is brand value. And together, I would like to really unpack this and maybe clarify this a little bit, because the topic, as Simon mentioned, is not 100% straightforward, right? And many people find it, to be honest, quite difficult and cumbersome. And even less straightforward is how that concept can apply to growing businesses like startups. So thanks a lot for joining this session. I guess you do look like a tough bunch of people, so let's do this. I personally find this topic fascinating, to be honest, and I hope that by the end of our session today, at least some of you will agree with me, at least to some degree. So let's dive into this. I think, my points of dissent, because this is the topic of today's overall event. I think there are quite a number of beliefs people hold out there around brand valuation, brand value, which I think are misconceptions. One of them is measuring brand value doesn't make sense at all, as brands are intrinsically intangible, they are fluffy, they are fantasy entities that just cannot be measured. Secondly, people often believe that measuring brand value only matters for big corporations with already strong brands. They have built something and now they have something to actually measure. Lastly, brand valuation is only worth if you plan to sell your business. Otherwise, why bother? So I'm going to argue against all of this and hope to convince you as well. Let's start maybe with a simple question. Yeah, simple in parentheses. What is a brand? What is this that we're talking about today? So, many people would connect it most closely to a logo. This is the shortest cut to what the brand is, right? Why not? Or maybe, other people will tell you it's probably more a slogan, this short, crisp message that you project outside and which tells people outside of the business what you stand for, actually, or your core belief. Others still would argue that it is a product, because that's the tangible part of it. That's the, the hardcore value prop that you deliver to people. They can wear in this case, or maybe more future looking, maybe it's a service which is probably will replace many products in the future. Or maybe it is a campaign when you really communicate with large audiences, and you can tell your story about your brand. Or maybe a role in society, which talks about your values, your beliefs, and you hope to share that with many people as well. Or actually, before everything else, very often the brand name is the shortcut for the brand. This is the brand Nike. So I think, the brand is all of that, right? It's all of that, and it's more. Because at the end of the day, the brand is nothing more, but also nothing less than this bridge that connects the business and the people. Because as a business, of course, you have your goals, you have your ambition, you have your sales plans, forecasts. You need to grow, and you have your journey cut out for you. But then you need people to enable this, right? So you need to find a way to change people's behaviors in order for this to happen. And these people, of course, primarily are your customers who need to choose you and to stay with you. But also people like your current employees, future talents who you want to join your team, investors who have to give you a certain type of valuation. So this is actually the where the brand comes in, connecting the business and helping it interact with the people that it wants to interact with. So when we look at the different things that the brand should drive, should orchestrate, if you will. So basically should guide everything that you do to create those touch points. There are many such touch points, starting with identity and communication, right? When we talk about things like, of course, the name is your core identity, your logo, visual identity, communications, ad campaigns, and so on, messaging, tonality, many things. But also products and services should be also guided by a brand at the end of the day. If that's your core idea, that should define how you design your products, how you price your products and services, how you build your portfolios, and so on and so forth. Also thinking about spaces, environments, they can be and often are both physical and digital for different brands. And they are super, of course, important touch points of interaction with your customers. And people and behavior, last but certainly not least, your employees, your top management representing your company, your ambassadors are all an important interface for your brand as well. So looking at just one brand example, Apple, which really is a textbook example of doing these things right through all the touch points. And of course, it's easy to say, of course, Apple, they are already the biggest, as Simon pointed out, also have the most expensive brand, but they really are an example of holistic approach to this. to this thinking, to this philosophy. They have this humanizing technology core of their brand, which if you look at, for example, their identity, their communications from step 0 to the last step is always about people. So even if they take a photo of their product, they always have hands holding it, right? So it's really technology that is working hard to for people, actually, to make people's lives better. All technology they show is always working for people, is always integrated in people's lives. And this is exactly the example of brand strategy permeating communication and identity. Products, right? Of course, products is a very important dimension of the Apple brand. And it's a whole mantra how they design the product. So from the design principles of the product to the product themselves, to representing the products and services around them, all of it is again guided by really this humanization, this people dimension, down to the emotions that that you can see here. Environments, I shall say no more, right? I think that's really amazing how digital brand, more or less, the digital icon, turned physical environments, their stores in this, temples of humanity in a way, because this is the, again, classic example of how spaces can be made human for people, for people's interactions, for everything that is important for people. And last but not least, again, people and behavior. So of course, the strictness and also the scrupulousness of how the brand is training their employees, how they're respecting them. There's a whole cult around Apple geniuses and how they should interact with other people, really representing the brand. That's also like a Bible. I think that's not a wonder, that's not a surprise that the brand is worth more than $300 billion. And actually, this is almost 14% of their enterprise value. It's a huge amount, and it's a huge share as well. So brand plays a very, 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 very important role in Apple's business. So, okay, you will say, right, okay, Apple, of course, I understand. It's huge. It has lots of resources, strong history, and so on. But why should businesses like ours care about brands, and why they should do it early? Apple got lucky, I think, because it was easy for them because they had Steve Jobs, of course, who was the ambassador, who was the luminary, who saw this from the start, and who was very, very strict and consequent in promoting this philosophy in the company. But, there are other examples, and I think that's really about understanding this idea from the start and doing it early. And why? Reason number one is that in contrast to what you can do with the help of sales activation, brand building will accumulate a more constant, more long-term basis. So when you start with even the seed phase, then you speed up your business and scale your business before you reach the steady state of mature business. You, of course, first rely on the push side of things. So you use performance marketing a lot, obviously, to push the sales. And it's going to be like this. I don't believe that performance marketing is dead. Sorry to say, I know I disagree, again, dissent from someone else in the conference, but that's going to be, of course, the core tool. At the same time, performance marketing, when taken alone, will show this, this great pattern. So you invest in it and your sales grow. But then when you stop doing this without the underlying cushion of the brand, it will go back almost to zero. And this pattern will repeat itself. Even worse, you could face also diminishing returns. So the best case scenario is you are not getting the most on your marketing investment. The worst case, you actually have diminishing returns. And the way to counterbalance that is actually build your brand, because doing this will get you from push to pull. You will pull business to people to your business, to your offer, and you will steadily build this basis, this equity, brand equity depot, as we call it, to hold up and increase your returns also on performance marketing. And this is what makes sense to start early, because this is a long-term game. It's not just, operational thing. It's a strategic thing. So that's reason number one. And reason number two is that actually from our studies, from our analysis of best global brands, we measured this, that brand plays a very important role in driving consumer decisions. So, and that is happening also in B2C, but also in B2B. Up to 70%, depending on the industry, it's actually the choice that is traceable to the brand. Which means that it's not the product features, it's not the price, it's not the channel, it's the brand that is influencing people's decisions. We can prove it by, for example, discrete choice modeling or conjoint analysis, excluding all the other factors. So that's a huge number, actually, and that, of course, should call for serious, thinking about building your brand. And reason number three is also that brands is universal. So it impacts both top and bottom lines. And the top line, which is revenue growth impact, you are looking at more non-paid organic awareness, higher conversion and higher retention and loyalty. And on the bottom line, you can really limit this negative effects like acquisition costs, customer churn, employee churn, and cost of capital, because consistent brand building efforts will convince your customers, employees, and investors alike. So what does it mean for you, as a business? As a starting business. So for a startup, we recommend to start early and start bright. This means actually defining your big idea from the start. What you stand for and why other people should care. That doesn't have to be complicated. It's not that I'm suggesting that every startup should invest in building a brand strategy, but it's the core of your brand that you need to, as a founder, as a top stakeholder in a startup, it's your homework to discern this core that will guide whatever you do. As a next step, you also need to understand what this means for the experiences that you want to create. So if this is your idea, then what does it mean for your product design, for example, for your pricing strategy, for your how you choose your name, how you choose your visual identity, what colors you use versus what colors you don't use, and so on and so forth. So it's really like a set of simple rules, basically, or principles that you can apply to creation of basically all touch points. And last but not least, again, managing your brand strategically to grow its value as a business asset is also super important. And again, you can tell me, okay, we don't have a brand as a startup to really manage. But that's something I would disagree with, because even if you're early, if you think your brand is not yet strong enough, you could already invest in understanding what are the elements, what are the drivers behind the strength of your brand, and then what you're building for. Because paraphrasing and known famous saying, if you don't know what you're building for, you might be disappointed with the result. So those are some words of wisdom. Basically, if you do this, we believe good things start to happen. So really, how can brand value be measured? Is it actually feasible? Is it something that can be done? And does it make sense? So first of all, about the how. In fact, it's not that esoteric, right? So it can be done, and there are several methodologies to do that. At Interbrand, we have, I would say, one of the most known ones and well spread. It's also patented and used by many businesses, and it's basically is built on these elements. There is a special formula based on financial performance. So we're looking at the underlying financial performance of a business. We then assess the role of brand, basically this component of, the chunk of business that brand is responsible for, or the percentage of revenues that specifically the brand is driving. We also look at something that is called brand strength, and I will talk a little bit more about this, but basically it's assessing the strength of your brand across a number of KPIs. And this put together in a certain way will arrive at, will give you monetary brand value expressed in hard currency. So just a bit more on methodology. I know that looks a bit confusing and complicated, but let me simplify it. It's not that counterintuitive. So if you take your financial performance, you're looking at your actual economic profit, right, at the end of the day. And it's normal financial analysis that all startups and all investors do. You then apply the role of brand to this as a coefficient, basically. So you're calculating then the chunk of the business that brand is driving or delivering. And then you use brand strengths as in a certain formula as a discount factor to calculate net present value of this future brand earnings. Basically, the underlying logic is that the stronger your brand, the less discounted will be your cash flows, the less risk you will carry in the future, and the lower the cost of capital will be for you. So that's the underlying logic, and I'm very happy to provide more details if you have like specific questions to this, but not wanting to just spend too much time on math here, I would actually proceed to this interesting question: why bother measuring brand value? Why would businesses do that, right? Because we think it uncovers interesting things about your brand and actually about your business, how it works, and helps you better manage it. So if you know the role of brand and its contribution in purchasing decisions, maybe we could think about investing in it more so we can drive more purchasing decisions. If we know the brand strength and drivers of our brand performance, and also maybe some gaps in our brand performance, should we maybe manage it differently? Should we focus our efforts on where we're lagging the most? And then if we know brand value, then maybe we could reflect it in our enterprise value to get to better valuations and better deals for our business. In terms of capital, in terms of partnerships, and many other things. So that's actually, I think, quite pragmatic number of benefits that you could derive from doing something like brand valuation. So also, I think what is important that brand value can be used not just for the number, but also as a metric system, because what gets measured gets done. And in this case, gets measured gets managed properly. Because what we have this here is brand strength KPIs that I mentioned before. We have 10 of them. Just reading from a list, you would, of course, know what they are about: intuitively, direction, alignment, empathy, agility, distinctiveness, coherence, participation, presence, trust, and affinity. So these are the things that we measure or we assess against competitors for each brand we evaluate. So we basically arrive at a number from 0 to 10 to measure each of these KPIs or metrics, and then we put it together into an index, brand strength index, which measures from 1 to 100 respectively. And beyond the number, it would give us things like, in this case, empathy, for example. We can see that empathy here could be a problematic area, and we could unpack this and see and ask ourselves, why are we lacking here? Why, we should be, how can we improve here? What can we do? And put together a plan to deal with this. And so that's, if we repeat the measurement, we can also see progress. So you can actually use it as a metric system for a brand. We know that, it does pay to build a strong brand. And again, here you can see the top 100 Interbrands best global ranking. Of course, those are big, huge companies with strong brands, but they always also started somewhere, and they did this brand building in a consistent way. Strong brands outperform the market, and that's absolutely clear. But what is also interesting, I find, is that they rebound after crisis much faster than other brands. So we, as said, we measure this, we track this for the top brands. We here have 2020 best global brands ranking, but we also actually in less than 2 weeks, there's the new brand, best global brands 2021. If you're interested, just check this out. The topic of this is dedicated of possibility, and we have an absolutely stellar lineup of speakers this year, starting from Steve Wozniak, co-founder of Apple, to chairman of General Electric, and many other stellar speakers. So it will be fun. Join us there on the 20th of October if you can. So finally, I know I'm moving towards the end of my sign time. I would like to challenge you, I would actually now like to announce the Brand Valuation Challenge. What it means is that Interbrand is announcing this free brand valuation, and we are willing to do this for a startup, for a scale-up business who would like to get on this journey with us, to try things out for themselves. So what all you need to do is to apply by October 20th. It's my address. I'm also happy to put it in the chat later. We'll run kind of a draw and select the winner by the end of the month, and then we conduct BGB light level valuation for the winner free of charge. So and you'll get a certified brand value calculation for free, and also the measurements of your brand strength and role of brand, which I think are also very interesting and relevant business tools. So with this, I'm done, and I'm ready to take questions. Simon?
Yes, I'm here again.
Back?
Okay, so thank you very much, Irina, for this very insightful presentation. And of course, thank you very much as well for what you call the free brand valuation challenge. I hope that at least some of the startups in the Project A portfolio will apply for this. So let's go to the question. Maybe you can stop sharing the screen now, because then it's just the gallery view of the two of us. Okay, yep. So there is a question in the chat from Nicola Rubino, who asks you, do you think brand strategy for startups has changed due to the saturation of online content publication on some platforms? So do you think, this is at least how I understand the question, there is more and more online content all over, and especially organic content, I assume, because this is what startups are mostly building on. And do you think this fact has changed brand strategy for startups, or the way startups should try to build their brand?
Yeah, I think it's a great question. Thank you. I think yes and no. Starting with a no, I think the underlying logic of needing to have at least a minimal brand strategy. So understand that what we call this core brand or minimal viable brand, as you call it, Simon. I think it's a great term as well. Should apply, and it was always the case. On the other hand, I do agree that it's just because the competition is increasing, it's no longer enough for startups to just, for example, disrupt an incumbent. There is more and more competition between startups, and which means this really differentiation patterns in terms of products are less and less feasible. If you have the content which is just evolving around your product features, that does not help you to stand out of the crowd. So you really need to figure out, your how you're different, and what you stand for, what you believe in, which is different from others. So I think, yes, that in this respect, it does increase the urgency of really thinking early about your brand.
Okay, thank you very much for the answer. So then there is a second question in the chat. So Hans is asking you if you see very important imperatives for scale-up marketing organization to follow your approach.
I'm wanting to say yes, of course. Actually, I think if we're serious, I do, and that's important that it's mentioned that scale-ups, because I think scale-ups is already almost like too late, or at least it's high time to think about your brand. And Simon, you would know it better than I do, because I had so many scale-ups coming up and saying like, oh, but you know what, we're not getting returns from our performance marketing anymore. We've stopped seeing the results, and we don't know what to do. We don't know what to say. Because our product is being copied, and that's the problem. So of course, the answer to this, yes, the brand building and the marketing organization, which is built around the brand strategy and robust brand management system, brand metric system, is a must, I think. And I'm saying robust, I'm not saying comprehensive. So again, it doesn't mean that every scale up needs to build a huge metric system with, brand health tracker and, every month's social listening exercise. But there should be, again, reasonable system that is systematic, coherent, and consistently measures the performance. Yes.
Yeah, I think so too. Then another question, let's jump onto that. Do you, Irina, think startups should work with brand agencies? And if yes, what is the minimum budget that should be taken into account? I think that's one of your favorite questions.
That's a
How
tough
much
one.
does it cost when we hire Interbrand?
Well, if you get into the challenge, it costs nothing. But to be serious about it, I have two answers to this. So I do believe that the initial work, the initial thinking work, like living through it work, should be done by the founder or stakeholder at the startup. So this should be supported. It's not like just outsourcing, brand building to someone, like, let us pay you and you bring us a brand. No, it doesn't work like this. Even working with big organizations, we as Interbrand, we don't do brand strategy for them. We moderate, we bring examples, we interview them, we make them talk to each other, but it's their job to define what they stand for. Then when you have defined that, and you could have an agency who could help you in the process, organize this process, then when it's about expressing it in different experiences, right, then you might need specialists. So if it's about a development of a logo, when you say to the agency, okay, this is what we stand for, please, bring us ideas of the logo, you can use your own designers, you can use an agency, it doesn't matter. It's already a question of craft rather than strategy.
Yeah, I would say the same. So I think the real positioning, so the answer to the question what the company is standing for and what the company wants to achieve, this has to come from the founders or from the top management. But on the other side, I would say it always helps to bring external partners such as brand agencies into the game, because the outside perspective really helps to sharpen this whole thinking. So not only when it comes to design, also when it comes to brand positioning, I think the outside perspective helps.
I agree totally. And I also think, this is also a sensitive process, because you don't want to get people frustrated, get people bored or confused in the process. So you need this partner who can kind of, push you, but also get the best out of you as a company to get where you need to get. Okay. So yes.
And now let's, please forgive me the second attempt. How much would it cost?
Yeah. What what? Yeah, exactly. I think if we're talking about craft things, that's really a commodity. I'm sorry to say, but it's not what I'm trying to say. It's it should not be a huge range of prices there, and prices are known. If you need a visual identity, then there is a certain range in the market, but it's not huge. It's really hard for me to now tell a number, but I can check with our creative department, and you can also do it with an agency. You can even do it with freelancer, but you really need to, in this case, you need to be very specific and very clear about what you brief for. And this strategic part it's hard to price, because it also depends on how active you are as a company in participating in this process. So how much of legwork you want to do yourselves. I do believe you can bootstrap parts of the process, but I would really invest in, as you say, Simon, in having this moderation, sparring partner in the process. It would, I think, take several tens of thousands, maybe euros, just to give you some very, very high level estimate, but it's not hundreds or millions. It's just, I think, feasible for many scale-ups, and I think it's worth it.
Thanks. Then maybe one last question. So you said in your presentation that basically the value of a brand is calculated as the net present value of future brand earnings. So this is also how we learned it at university, and this makes sense. But now this brings me to the question. So as you know, a lot of startups, they don't make profit. So maybe they have revenues, but they don't have profits. So how would you deal with this fact when calculating the value of a startup brand?
Yeah, so it's a good question. And to be honest, the answer to this, I think, is to measure brand value only makes sense. Does only make sense when there is some kind of already financial projections or financial, verified financial projections. So when there is no revenue, there is nothing, there is actually no basis for calculation of a brand. At this point, I would not engage in brand valuation. I would wait till there is some financial flows to measure them. And of course, there will also apply some adjustments because to the methodology, to account for the fact that, for example, startups would have a longer period, not 5 years. Normally we take 5 years projections, but for startups, we would take a longer period because we would give them more time kind of to grow.
Okay, so sorry, yeah. I'm really sorry, but I have to interrupt you here because we have to hand over the stream to the next session. But thank you once again, Irina, for having joined Project A Knowledge Conference and for your presentation, and of course for your offer of the brand valuation challenge. I hope that a lot of startups will apply for having calculated the value of their brand for free. And to all the attendees out there, thank you very much for having joined the session, and we wish you a very insightful rest of the day.